Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to subscribe. And thank you so much to everyone. We just hit 700 subscribers on YouTube, so that is amazing. And be sure to subscribe so you don't miss any upcoming incredible guests. And speaking of incredible guests, I'm going to throw it over to Rusty Ram 78. Give yourself a brief introduction.
Incredible guest, dude. You're too kind. That's too nice. Yeah. I have Dapper Dividends. So Dividend Dave, Dapper Dividends, delightfully discussing dividends on this. Too bad we're not in December. That would have just fit too well. But yeah, no, I'm Russ, and a lot of you may or may not know me. You may not have seen me around the interwebs before. So I am here I was just talking to Dave before we came on in Chicago, on the outskirts of Chicago. And I'm going to be 45 in April. So, dude, I love investing.
Which I would have never guessed.
Yeah, dude, that's fantastic. Like I told Dave, I'm like, dude, you just made my day with thinking I was much younger than I am. I love it. But
yeah, we were talking before we started recording, and I was just like, I definitely would have never guessed you were in your 40s.
I love it, man. No, that's beautiful. You get little surprises in life that you never know when it's going to come up. Like investing, the unexpected is always on the table, I like to say, and we should always prepare for the unexpected. How do you prepare for the unexpected? I don't know. I guess just always expecting the unexpected can happen. If that isn't a tongue twister enough for you. Yeah. So I got a, pretty much Family Guy. Not like the TV show quite, but I have two teenage daughters. Almost both in high school. One just started freshman, the other's in 8th grade. So that's been fun learning to watch these kids turn into teenagers. My wife is mostly dealing with that. Thankfully, I go out and make the money. She deals with that and then allows me to do things like chatting here. And awesome. I started investing. Well, it depends on what you consider investing, because I started contributing to a 401k in 2003, but lots of guys I work with contribute to 401ks, and they're technically investors, but they don't even know where the 401k is at. So, it's good. It's a good thing that they're still invested in the market, and they don't even know, what they're invested in. So, I guess it's better than not being at this point.
Oh, definitely.
But around 2017, I kind of wanted to take things into my own hands and, kind of be a Wolf of Wall Street, Jordan Belfort. Belfort, is it? I forget his last name. Is it Belfort?
Jordan Belfort.
Okay, that's good. Good. At least the memory's still there. So we got that firing on all cylinders. And I wanted to be like him and do the penny stock thing. So I found Robinhood and I got on that, and that pretty much failed miserably. Lost money trading penny stocks. And one of the problems I had was holding on to things too long. I have this problem, and I've come to just admit it, that I'm a buy and hold investor. When I buy something, they always said, rule number one, you got to date those stocks. You don't marry them. And I was marrying each and every single one, and it would go down and I would just buy more. It would go down. I would buy more. So that kind of culminated with me buying NEO when NEO IPO'd in September of 2018. Oh, dude, I thought it was going to be, I'm like, that's it. This is the Tesla of China. Well, one of the things I found out is when you ever hear that something is going to be the next something, the next Warren Buffett, the next Tesla, usually it's not. It doesn't turn out to be that way. So I started buying more and more NEO, and it had that initial IPO pop, and then it started dropping, and I just kept putting more money in. And I was like, okay, when it pops above my average, I'm going to get out. I kept putting more money into NEO. It kept going down, and this was happening for a while. But it was one night, I would watch the pre-market. I became so obsessed with NEO that I was losing sleep. I would wake up at, I don't know if you've ever seen Quantum Leap. You remember Quantum Leap with Dr.
the
Sam
TV
Beckett?
show. I do remember that. Yeah.
Yeah, I kind of felt like that. I'd be looking at my phone at 4 a.m. and say, is today going to be the day that I get out of NEO? It's going to have this crazy pop. StockTwits is the app I would use. And I would be looking there. My wife's sleeping. The kids are sleeping. I'm up with the phone in my face, 4 a.m. I was tired. And I just, after like 3 nights of that, just having that pit in my stomach of like, come on, like, I don't want to lose any more money. I remember thinking about my grandfather who, I was pretty much raised by my grandparents until I was 10. My biological dad, my parents were young, dude. They were 18
Yeah.
and 19 when I was born. My dad didn't want to be a dad at 19. He left. So my grandpa liked investing. I remember him every morning looking in the paper. He would always look at the stock tickers, see what went down, which is crazy because now we're doing it constantly. Dude, I'm working. I'm sitting in traffic watching the numbers tick up and down. And the problem with that, right, is that that's the price. The price changes constantly, but the value could take years to change. So
Right.
that's a whole side note. But anyway, just to cut to the chase about how I became a dividend investor, I was sitting there one morning thinking, my dear departed grandfather invested, and I never remember him talking about just, I'm tired, I'm upset. Dude, he never was like complaining about stocks going down. He was never angry at the market and thinking it was against him. And then I remembered him telling me that he liked some stocks like Walmart, Disney, AT&T he would buy because he said they paid good dividends. Well, thankfully, that stuck in my head. So with the
Yes.
power of Google, I just Googled dividend investing, and I always say I went down the rabbit hole. Alice, meet rabbit hole. I went down, I never came back up. And it took a little while of getting there. I went through the bumps and the things that you learn in the beginning when I bought AT&T, and I was like, okay, cool, I'm investing in dividends. And then I'd see, like, I think at the time it was 46 cents or 47 cents a share every quarter. And I was like, dude, I could make that in like 5 minutes on a penny stock trade. So it took a little while to click and start to talk to the community, like people like you, which is, I love talking to the community. Everyone
Yes.
helped me. It's like, no, it's stacking those dividends. It's compounding. It's when your interest starts paying interest, when your dividends start buying you more dividends. Like,
Yeah.
that's where the magic happens. And here I am, man. Started a YouTube channel.
Nice.
COVID baby, I think, or there was a name for channels like back in, I think it was March or May or April of 2020, right around that. I started the YouTube channel and podcast and website. I just went all in with everything. And so here I am, loving dividends and sharing what I'm learning and my experience along the way.
Awesome.
Cheers.
Yeah. So I have a lot to unpack there. So first, I'm just going to mention again that, as most people know, I'm in Canada, so we'll have some back and forth about the Canadian and U.S. markets, the differences and similarities.
You're in Toronto,
And
right?
I'm
TO?
east of Toronto. I'm east of Toronto.
Okay.
I'm in
Hey,
a
Babe Ruth hit
rural.
his first home run there when he played for, I think it was the Toronto Grays, something like that.
Yeah, I can't remember the name. It was long before the Blue Jays were ever a team. The Blue.
1914. That stuck in my
Yeah.
head because that's the year my grandpa was born. But there you go. Useless sports trivia for all y'all. Babe Ruth hit his first home run in Toronto.
Yeah.
Sorry, man.
Interesting
Yeah.
side note. So actually, just kind of going back to what you were saying about some of your coworkers investing in a 401k. So that's an American thing. So honestly, obviously, I see 401k from on Twitter and the American investors talking about it. I honestly don't really know what it is. I don't know. Maybe if you want to just explain that a little more or not, we can just jump to another segment because you also mentioned in there AT&T and
Mhm.
Walmart, and I want to get into both of sort of those sectors, telecoms and then consumer staples as well. So I guess throw it back to you if you want to just maybe explain to me what a 401k is.
Yeah, I may not give you the Merriam-Webster's dictionary definition of 401k, but it's kind of like an individual retirement account. There is a distinction, and I should know the difference between 401k and IRA. I believe 401k is what what you contribute your pre-tax dollars to when you're at an employer. But if, my wife, she could open up a IRA and just put money into that.
Right.
It
So
so
IRA
just
is another American thing because so
correct,
what we
correct.
have here is called a TFSA, which is a tax-free savings account. The word savings, I feel, shouldn't really be in there because it's a tax-free investment account, and there is a limit to how much you can contribute. However, every single year they raise it by another $6,000 or $6,500, 6 grand or 6,500.
Wow.
So, and they started this, I want to say, around 2008, somewhere in there. So it's now up to roughly, I believe, just shy of 90,000 that you can have in there total. But like I said, every year, like so next year it'll go up to say 95,000 or 96,000,
Uh,
depending on where it is right now. And so
Oh,
as long
that's
as you, yeah, so as long as you stay kind of below that in that, you're okay. And then obviously too, you can if you have maxed out your TFSA, which a lot of people have, then you can go and start investing in your RRSP, which is a registered retirement savings plan. And there's different ways to go about that as well. And then there's beyond that because there's contribution limits to that as well. And then beyond that, then you can have like a just a personal um, like a personal investment account, which then is taxed. Well, the RRSP is also taxed, but it's you have there's benefits to that because you can claim it on your tax return every year. So there's back and forth. There's different things to I guess judge and monitor for each individual. But yeah, definitely, they're different, but it sounds like they're very similar between like comparing the TFSA and RRSP to a 401k and to an IRA. Like I guess just different the way different things are set up in different countries.
people that may be new to this. It might sound like alphabet soup coming out of our
Yeah,
mouths
we're
here, you
a
know?
whole lot of letters and numbers and
Yeah, so that's interesting with your guys. It sounds like it's a max on your account value, where here in the United States, you can contribute a maximum every year. So currently, now there's different varieties. Like if you're a teacher, you have I don't know, it's like I don't remember what it is, but it's a few numbers and then a letter after it.
yeah,
And the whole thing is like right now, last year it was 20,500 for the IRA and the 401k, and that's what your max out is 20,500. Now the IRA, or I guess it's the IRS here in the United States, they raised it to 22,500 for 2023. So it doesn't matter how much, you could have $10 million in there because if stuff appreciated. So it sounds like with what you're talking about up there in the Great White North, that you can't have more than a certain amount. So how does that work
well,
if
you can. That's what I'm saying. Then
okay.
you would end up putting it in your personal investment account, which
I
then
see.
would be taxed.
I
But
see.
so, and again, the RSP every year there's a max contribution as well, which adds up. It's not like, oh, I missed putting in 10 grand this year, so I can't. You can backdate that right back to like probably your 18th birthday. I'm not sure when you're allowed to start even putting into an RRSP. So like, over 30 years, if you haven't put any in, well, you've got plenty of contribution room, right?
Okay.
So
Yeah, but you're not going to hit the compounding effect. So it's better to
no,
start earlier. I know there's that famous chart that shows I think it's if somebody put in from, oh, I don't remember, it's something like 20 to 30 years old, you put in whatever
yeah,
amount of dollars, then somebody that went from 30 to 60, like you would have roughly the same amount. And that 20-year-old, once they hit 30, if they never put another penny in, and that just shows like the younger you are, the earlier you need to
yeah,
start, the better. And I've got my daughters onto that. They're not really interested in investing, but I've got a few ways I've tricked them into it with birthday money and stuff. And uh, one of the things is interesting is that there's also we have a Roth. So those first two I mentioned are pre-tax. So you're not paying any taxes on that until you
right,
pull the money out. But then your Roth is only $6,000 maximum. I think it's going up to 6,500. That's all post-tax money. So you've paid taxes on that money and then you're investing it, and you'll never pay any kind of, well, I say never because with the
yeah,
government running things, but you're yeah, you'll never pay tax on that. But there's ways to, I love the fire community. There's ways to gain the system that people have figured out, like a backdoor Roth, is you
right,
can take money out of your retirement account, out of your pre-tax dollars, and put it into the Roth, which is post-tax, but you have to pay your income tax rate on that money because they count that as income.
right,
But some people in the fire community, there's limits where if you're below an annual threshold, you don't pay any income tax. So it's a way of like, if you're going to have very low or no income, and maybe you're just living off of, I don't know, capital gains or something, then you're below that threshold. You can move that money over into a Roth. You can't take it out for 5 years, but you won't pay taxes on that. So it's just, I love it, dude. As soon
yeah.
as a law is made, a tax law, people start finding the loopholes to it. So yeah, it's that's interesting. So that's kind of the nutshell about it. And then, do you guys have employer match? So most
Yeah.
employers try to encourage people to save and invest. And it's funny, I like that distinction. I never heard that before. You said it's not savings; it is investing. And yeah, like a savings account, you think of your bank savings
Yeah,
account, and
so
the
you've
money's just
probably
sitting there. Yeah.
seen, like, I'm sure you probably follow other Canadians, besides myself on Twitter, and you've probably seen some of these, like you said, alphabet soup and TFSA, but it
Mhm.
really is more of an investment account. That's a great start to this podcast, really talking about sort of the end goal that we're all investing in the dividends for. We want to retire. Um, whether you get to the point where you get to retire early, or even just you work to 60 or 65 and are able to retire comfortably. I think that's the real key, is being able to retire comfortably. Um, in Canada, we have two things called the CPP, Canada Pension Plan, that you pay into your whole life, and like through your employer. It's a deduction from your paycheck, no matter where you
That
work.
sounds like Social Security in the
Yeah,
United States here. Something
and
similar.
then the
Yeah.
second one is called OAS, Old Age Security. But if you're relying on just those two payments from the government each month after the age of 65, that's not enough to live. So you need
No.
to have, yeah, like you said, whether it's an employer pension program, which I'm lucky enough to have at my work. They match 3 or 4%, and so that's good, right? You're contributing there again through every paycheck. But of course, we're in this dividend world to try to, you know, make it better for ourselves, so that when, we're both in our 40s, when we get to that in 20 years time, that 65 range, less than 20 years for me, but um, having those dividends coming in every month to just sort of boost that income, so you are still living comfortably when you're not working, right?
Oh, for me, absolutely. And it's funny you say whether you're still working at 60 or 65. I think a lot of people, what they miss is that you're not retiring and not working. My mind, I love reading Stoic philosophers. I love Stoicism. And they say that the mind was made for work. Your
Right.
brain is meant to work, to do things, to be productive, to solve problems, to help people out, just to do something. But I think the key is transitioning to something that you are passionate about, something that you love, and you're not worried about how much it's paying you. I think a lot of
Right.
people, we get in that trap of going after what pays the most, but it may not be fulfilling to us. We may not like what we're doing. So to me, that's what I'm doing. Like, I love this. I hope for years and years that it's only going to improve. I can keep talking about investing. The beautiful
Yeah.
thing is the market is changing every single day.
Yeah.
Something new is happening, something crazy. Kroger is buying Albertsons. They're spinning off a big special dividend. What's going to happen? We don't know. It's like
Yeah.
new threads of a movie, new twists and turns. And this is something I love. People that I work with don't always understand. They're like, "You spend how long making a YouTube video?" But yeah, it's not a huge reward right now, but I really do enjoy it. I love meeting everybody in the community, talking with everybody. And you know what? It's just, I want options. To me,
Yeah.
dividends give us options, and the more money you have, money isn't going to make you happy. Money is just a tool. You can have all the tools in the hardware store, but if you don't give them purpose, you're going to go home and sit around all these tools. You're going to be
Right.
miserable, because money is the same thing. It's just a tool that you
Yeah.
can use to make you happy, but money in and of itself is not the end goal. It's not the thing that's going to bring you happiness. So it just, ending that thought, I think that's what I'm going after is,
Right.
I want more money, because more money will give me more options to do what I want, when I want, with who I want, on my
Yeah.
own terms, kind of thing.
And that's, I guess, to my or one of our points about
Mhm.
retiring at 65, and to your point about still the brain needs to work and do things and solve problems. It's after 65 or at the age of 70, are you in a position where you have to keep working because you need the money, or you just want to keep working to give your brain and your body things to do? And I think that's a very distinct difference, right? Working because you have to at the age of 70, or working because you just want to. Work
Yeah.
optional. Another thing I
Oh,
want
okay.
to
Yeah.
just
Sorry.
there's a few things there from your last few statements. Actually, going so first, I'll say I'll have your YouTube channel in the link in the description below.
Ah,
So
thank you.
we'll definitely make sure to get a shout out to your YouTube channel. And going back several minutes now in the podcast, you're talking about your grandpa looking at stocks in the newspaper,
Hmm.
and that really like reminded me. I actually used to do that when I was because again, we're old enough to remember when you got the daily newspaper, or at least on the weekend, you got a Saturday or Sunday morning paper or whatever. And now, yeah, it's right there at your fingertips on your phone all day, every day. You can be looking at your phone or if you're on a laptop or computer or whatever, but it's the information is right there. You're not waiting till the next morning to see what happened yesterday. It's happening immediately. So that was just another, I guess, point I wanted to touch on there. That obviously the times have changed a lot in the last, say, 30 years from the early 90s to now, where the internet obviously has changed everyone's life around the world.
Hmm. It's a blessing and a curse, I think. And I
Yep.
missed the big point that I can't believe I forgot to say it. One of the quotes I came across that literally changed my life. I have it framed where I put my work boots on. I look at it every day I leave for work, and every day I come home. Twice a day minimum, I look at this quote by Warren Buffett, and it says, "If you don't learn to make money while you sleep, you will work until you die." When I heard
Yeah.
that, and whether he said it, I think he said it because if
It sounds
hey, if it's on the internet, it's true. I mean, I've never
yeah.
heard it come out of his mouth, which that would be interesting to see if he actually said that. But regardless, the point is so very true that if you don't make money while you sleep, if you're spending everything as soon as you get it, you will literally work until you die or until somebody takes care of you. And that's a big ask,
Yeah.
asking someone to take care of you because you didn't save any money and you didn't read The Richest Man in Babylon. Come on.
So speaking of that, like making money while you sleep, there's absolutely nothing I love more than waking up to a notification on my phone that says company X, Y, or Z paid you a dividend of X amount of dollars. That's like the absolute best feeling in the world. It's just like I just got paid. I love it when companies pay me to not work for them. It's pretty much my favorite thing in the world, right?
And I love what you said. The companies are paying you. Why are companies paying us? Companies are paying us because we literally own these businesses. I think a lot of young people are finding out the hard way that you're not just buying a ticker on a screen. You're buying a business, you're buying the cash flow it produces. And a
Yeah.
lot of mistake young investors make is buying stories, these hot story stocks. They're going to
Oh,
change the
those meme
world.
stocks from 2 years ago. Oh my goodness.
I,
I stayed
that
away from them, but and I'm sure there were a lot of people I'm sure that made money, but I in my mind I'm just saying to myself there has to be a lot more people that lost money on those.
Hey, what has two thumbs and made money off of a meme stock? This guy off of AMC. Only two shares. I bought two shares of AMC at $9. And when it started going up, I was like, all right, I at least wanted to sell it for, I would have sold it for $12 just to make like $3 a share.
Yeah.
But when I was looking, I like a lot of technical analysis, reading the charts. And it's really all BS when it boils down to it because it's just showing you what happened in the past and you're trying to predict what's going to happen in the future by what happened in the past, which is just insane. You can't do that. So
Notice he has
anyway, I
some screen time.
what's that?
I was just saying notice he has to get some screen time.
Oh, yeah. Yeah. So that whole thing with the technical analysis, anyway, I was watching. That's what it was. AMC. Sorry, my brain was like, it
Yeah.
was missing a file, and then like one half of my brain is saying like, "Hurry, stall while we're looking for it. Keep them going." And the other mind's like, "We got it. We found it." Yeah. So I was looking at the chart, and it got to a point where it was, I think, 65 or six. I sold at, it's not world beating, but I bought AMC at $9. I sold it in the mid 60s, and I was happy. And it went up a
Yeah.
little higher after that, but that was kind of its peak, I think. But I knew it was crazy. I'm looking at the
Yeah.
business being like, this is a declining business with GameStop. That's a declining business. And I remember people on social media, they're like, yeah, I'm thinking of buying GameStop at whatever, like $300 a share. And I was like, oh my God, like, I
Yeah,
think
don't
this
do
company is
it.
worth like $5 a share. This is
Yeah,
nuts,
wow.
And
Amazing.
unfortunately, a lot of those people got burned and they're like, the market's rigged. It's all a scam. I'm out. And they're never going to come back,
Yeah,
unfortunately, you know?
and they're not gonna find, these sweet dividends that pay you literally to not work for them every month or every quarter, and the money just keeps rolling in, and like you said, you get to that point where the dividends start buying more dividends, right? And that's also a great feeling when this past month, you may have seen one of my tweets about should I pay off my Visa fully? It got a little higher than normal because
Mhm.
I had some truck repairs, or should I like split it and put some money into my investment account? And the overwhelming response on Twitter was pay the Visa off fully, right? Which I'm about to do actually.
Yeah.
And so this month, everything that I invested was just from dividends. I might, after I pay the Visa off, and I have my phone bill still to pay, and my mortgage comes out every biweekly after every paycheck. So
Mhm.
after I have all that taken care of, make sure I have enough groceries and gas, I might still have another 50 or $100 to put into my investment. But for the most part, this month has been just dividends well, so far this month it's been all dividends reinvested. That's it.
Well, dude, you just nailed it. I mean, you want to pay off the credit card because interest that you owe is a cursing, but interest that you is a cursing is a
Yeah, it's a
curse.
curse.
But interest that you receive is a blessing. I think I combined curse and blessing in my head
Yeah.
there. It's a cursing. So, new word, trademark by the way. But yeah, and I think that's a really important distinction again is just you're owning these businesses, man, and it's a beautiful thing that we're owning all the people like when I love PepsiCo. I had that challenge where
Yep.
I bought a share a week for 100 weeks and dude, I love it when I see PepsiCo trucks out there. I see their products in stores. I love seeing the products in proper recycling bins because I know that people are buying the product and using it.
Yep.
And it's like you said, dude, when the dividends are buying more dividends, you can experience this with a very low amount of money because my daughters, when we got our stimmy funds here in the United States during COVID, which, oh my God, inflation's here. Can you imagine why? No, I can't imagine. They were just giving everybody free money for no reason because you exist. Here's money. Yeah, I
Yeah.
wonder why everything's going up and out of whack. But we took the money we got for our daughters and I put it each into I opened up a custodial account for them, which means they'll take control of it at 21 years old. But
Right.
until then, I'm in charge of it. It has their social security number, their name. They will own it, but I'm just the custodian until they're 21. And I
Perfect.
let them pick a handful of I pre-selected because I didn't want them picking, the meme stocks they might be seeing on TikTok. But I picked like 10 or 12 dividend stocks that I approved and said, here you go. We'll put your money into which ones do you want? I let them each pick. The only exception I made was my older daughter wanted some Tesla. So, and that of course did really, really well for a while. And she's like, this one's doing better than the dividend stocks. I'm like, damn you, Elon Musk, you're ruining them. But anyway, so she's still in Tesla, even though it's pulled back. It's had a significant drawdown. But the
Yeah.
beautiful thing, and I show them, even though you have a little bit of like Coca-Cola, you're still getting dividends. They received my daughter just, I think it was $1.06 USD in dividends from Coca-Cola. And then the next day, that automatically purchased her $1.06 worth of Coca-Cola, which is going to just keep growing those dividends. And she didn't
Yep.
do a dang thing about it. So even though you don't have to have, I tell people, it doesn't matter how much money you have, but you have to start. And you're still,
Yeah.
even if you invest with Warren Buffett, you're getting the same percentages, the percentages of dividend increase. Like all your percentages are the same, and just the nominal dollar value is not going to be the same, but that's okay. We can't all be big Warren B, the buff
No, we
dog.
can't, but yeah, great points, and great that you're doing that for your daughters, and hopefully they'll see if they're in grade 8 and 9, sounds like about the age, so
Yeah.
another, what, 7 or 8 years before they're 21,
Oh
and
yeah.
by the time they get to that age of 21, and I'm sure they will see the growth, you're putting them on a great trajectory, and hopefully they keep with it because if they're already that far ahead of the game by the age of 21, and yeah, they should be well set by the time they're at our age, basically, right?
Let's hope so, man. Because right now
Yeah.
they don't have any interest. They're like, "Are you talking about dividends again?" I'm like, "Yes." I'm like, "You gotta learn this. I'm gonna beat you in the
Well,
head
use
with
my quote.
dividends."
Use
But
my quote.
that
Say,
sounds wrong.
just use like you get these companies are paying you to not work for them. And they'll probably do they have jobs yet? I'm sure if they
Mm,
have once they have jobs and start working and they're going and making their minimum wage at McDonald's for their first job, they'll start to realize, "Hey, I really like getting paid to not work for companies as well." Right?
no, oh, dude, it's yeah, it'll come around. But like,
Yeah.
and I put myself back when I was 15, dude. Girls and video games,
Yeah.
pretty much, and TV. Like, and it's funny. I look back and I think I wish I would have, picked my grandfather's brain more and talked to him
Right.
about stocks more. But I was just, you can't change the past. You can only change what you do going forward. So I
Right.
try not to dwell too much on the past unless there's a lesson that I can pick from it that I use going forward. Which, dude, in this investing thing, I've got a lot of lessons that I'm using going forward. Not unfortunately, that's right.
Yeah,
They
yeah.
say any money you've lost in the market, and you will lose money. It's 100% guaranteed. At some point, you're going to lose money because if you're investing and trying to not lose money, that's like trying to breathe without exhaling. It just
Yeah.
doesn't work. So you just want to limit the losses and learn what you did, because if you make the same mistake going forward, then it's a choice. So we try to limit our mistakes. And yeah, that's your tuition to the market, man. Any money
Yeah.
you lost is just your tuition.
Like
Yeah.
trying to go swimming without getting wet. Can't do it.
Yes, exactly.
So we actually haven't dove into any
Mm,
sectors yet, but we have talked about Coke, Pepsi, Walmart. So let's get into unpacking a little bit more consumer staples. Uh, Procter and Gamble came up as well. I was just mentioning this on the podcast I recorded last night. How we were talking about the things around your home, and 3 or 4 mornings ago, I was about to brush my teeth, and it was at that time where I had to start rolling up the tube of toothpaste, and I just happened to see on the back of it P&G, right? Like Procter and Gamble's right there. You don't think about these companies, but they're in your house. And again, same like whether it's Coke, Pepsi, General Mills, Kellogg's, these companies that own the majority of the grocery store. You've probably seen that chart on Twitter where it's 10 or 12 companies and all the brands that they own, like their umbrella of brands, and it's like the entire grocery store, 99% of the grocery store is owned by those 10 or 12 different companies. So, yeah, consumer staples to me is a fantastic sector because it's things that people use, things that people have to have, like food, right? You have to. Everybody eats every day, no matter what. Whether it's a recession or not, whether the market's up or down, people are eating every single day. So, consumer staples, food, I love that sector. I'm also slightly biased because I do work in the food industry.
Oh, really? Okay.
But yeah, so I'm a purchaser. I do purchasing and logistics for a cannery. We can soup and beans. We sell to Costco Canada, Trader Joe's in the U.S. We do a co-packing for General Mills. I'm not allowed to say what we
Mm-hmm.
co-pack for General Mills. Um, we've actually sold to Costco in the U.S. in the past, and then we also sell to several of the Canadian retail grocery stores as well. So, yeah, people eat every day, and so it's just a matter of picking almost any of these companies because they're big companies that aren't going anywhere. Probably all of them pay a healthy dividend. I don't know obviously off the top of my head all the dividends that all of them pay, but
Mm-hmm.
yeah, and before we started recording, you also said that you appreciated the consumer staples sector as well. So throw it back over
Yes.
to you.
So for those of you, kind of funny, I just saw on the corner there. I have this. My daughter likes pumpkins. This is Hawaiian
Yeah,
Aloha. This is Febreze, Procter and Gamble product, Febreze.
yeah,
And in our laundry room, it was just, I think it was yesterday. I started a load of my work clothes with Tide, Procter and Gamble.
yeah,
Showered, and as I underarm deodorant, Old Spice, Procter and Gamble, and then Gillette. I shave the aftershave gel, Gillette, Procter and Gamble, and then I use this. My daughters, I steal it from them. I have this spray-in hair conditioner that I use, and it was Pantene, and it was sitting over there. And I'm looking at the Pantene bottle, and I'm thinking like, no. So I grab it, and I'm slowly turning it, and it's like there's the P&G logo. It's like, do, 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 do. I'm like, everything in my
Yeah.
house is Procter and Gamble. I do it. I wanted to grab my wife and look her over to make sure there wasn't a Procter and Gamble tag on her.
She's got
I was
a
like,
P&G tattoo somewhere.
yeah, that's what I was gonna say. They are everywhere. Procter
Yeah.
and Gamble. I mean, you have like products like Procter and companies, Procter and Gamble, Church and Dwight, love them. They have like Arm and Hammer. What else they have? They don't have like Trojans. That's kind of a joke that they have. Um, yeah, I mean Colgate, Palmolive, Kimberly Clark. I always say Kimberly Clark is wiping butts and blowing noses for
Yeah.
over 100 years.
Yeah. Yeah.
All these companies, and it can be dangerous in the vein of Peter Lynch saying that you can't just buy companies because you use them and you see them all over. Doesn't mean they're a good company. Like you could see Blockbuster Video. I'm sure you remember them. They were everywhere.
Sure do. Yeah.
Yeah. And interesting story, by the way, Reed Hastings, the Netflix, oh, dude, he had a vendetta against Blockbuster Video because he wanted to sell. I don't remember the dollar amount. It might have been like $1 billion or something. I think he wanted $1 billion for Netflix back in the day when Blockbuster was at its zenith. And it's that famous story that the Blockbuster exec said, "We'll give you 500 million." And he was like, "No, my company's worth $1 billion," and whatever the number was. And they're
Right.
like, "Yeah, no, we're not interested. Thanks." And he was like, "I'm going to make them pay for this."
Yeah.
And sure enough, like
He
he had a
did.
vendetta against Blockbuster. And it's insane when you look at what Netflix went on to do. And he literally put Blockbuster out of business, and they could have bought him for like, I think it was $1 billion or something,
Right.
just pennies compared to what they became. So it goes to show you never, like we talked about, the unexpected is always on the table. We never know what's going to happen. But
Yeah, definitely.
when I invest, I'm more, I don't know if you're an intrinsic value type of guy or investor. I know a lot of people are. I get it. But to me, again, because we don't know what's going to happen, I like to take a more more simplistic approach like PepsiCo. Do I think in 10 years that there's still going to be PepsiCo products everywhere? Which, by the way, 55% of their
Yes,
revenue in
definitely.
2021 was from food and not from beverages. 45%, obviously, because I do math, dude. That's why you come to this program, is to get that kind of hard hitting mathematical analysis. But yeah,
Yeah, I've
PepsiCo,
definitely
dude,
heard that
sold more
about
in food. Yeah.
Pepsi.
Yeah, yeah. So I try to look and see if they're if
So
I
going
think
back
that
to
they're
an
going to be in demand many years from now with any product. Lockheed Martin, I think
right,
they're still going to be having government contracts. Pretty big moat there. Sorry to
definitely.
cut you off, man.
Yeah, so going back to one of your points about,
Mhm.
I'm not sure who the person was that you said, "Oh, don't invest in a company just because you use them." I
Peter
disagree
Lynch.
with that. I
Yeah.
think I actually just tweeted it yesterday, or it was a reply to a tweet where I said, invest in your phone company, let them pay your phone bill with dividends. Invest in your bank so they can pay your mortgage with dividends. Invest in an energy company so they can put gas in your car. Invest in a grocery store so they can buy your food, right? And yeah, and so his reply was like, yeah, turn the cash register around, which I think, personally, it just makes sense to me to invest in these companies that you use that are big companies that aren't going away. Telecoms is a great example in Canada. Bell Canada,
Mhm.
TELUS, and Rogers
Yep.
Communications are the three biggest. I happen to uh, I happen to be with Bell, and so yeah, I've started to invest in Bell. I have a very small position, but every quarter I'm gonna dollar cost average into it to keep to get it to that point where when they pay that quarterly dividend, maybe they will be paying my cell phone bill for a month, hopefully 2, hopefully all 3 months of that quarter, I can get it up to them paying me to pay them, basically. And same with my mortgage. I'd love for the I need to start investing in that bank, but, get them to pay me to pay them back, right? Like, it just to me, that makes sense. It makes sense.
Hell yeah, man. So is it sacrilegious then, cuz you're technically, right, getting, if you invest in Bell, isn't that who, don't they own the Bell Center where the Habs play? Aren't you getting money from the Habs? I mean, I don't know.
So yeah,
Maybe you're not a
they
mate. See that? I'm sorry. That's probably wrong for me to assume that all Canadians are hockey fans. I just assumed it might have been some kind of
so
government
I am. I
mandate.
grew up playing. Yeah, it is. Yeah. I grew up playing hockey. I actually grew up living when the house I grew up in happened to be right beside a hockey rink. So
Okay,
yeah,
nice.
only in
So,
Canada can you grow up in the middle of nowhere and still be right beside a hockey rink.
so speaking of hockey rinks, and this can tie into dividend investing because I love to make things interesting. So, right, we have Bell.
Yeah.
They still own? Cause it's been a minute since I've followed hockey, but they own the Bell Center, right, where the Canadians play, I believe.
Yeah, so very interesting. Another podcast I did with Scoreboard Investor, where we somehow ended up on a complete tangent talking about stadium names and the sponsorships. So you're
Yeah.
correct. In Montreal, the sponsor is Bell Canada, so it's called the Bell Center. Rogers, the other main or the top three Rogers, they happen to have three: Rogers Place, Rogers Arena, and Rogers Center in Toronto, Edmonton, and Vancouver. And I honestly don't even know which one is which, like Rogers Place, Center, Arena. It's like I can't keep track. And then TELUS probably might have one of the ones in Alberta. I'm not even sure what those stadium names are. So yeah, but you're 100% right. Like Scoreboard Investor and I were semi joking, but almost serious. Like we could do a whole podcast just of talking about stadium names and the companies that sponsor them, right? Like AT&T Park in, I believe, San Francisco, or in Chicago, it's the United Center, if I'm not mistaken. And tying back into Canadian banks, not that we've got into Canadian banks much, but their presence in the U.S. In Boston, TD Gardens, and I believe RBC, Royal Bank of Canada, I believe they have the sponsorship in Carolina, if I'm not mistaken. So, yeah, there's a lot to unpack there just with the
Well,
stadium names or stadium sponsors, right? Those companies, you look at those companies, and you could probably build a pretty good portfolio just based on stadium names and stadium sponsors.
yeah, going with that and keeping in with hockey. So Comcast owns where the Philadelphia Flyers and the Philadelphia 76ers play.
Yep.
Can't think of the stadium name right now. I was going to Google it. And then they also own the Philadelphia Flyers. So I own Comcast. Hey, I own some of the Flyers there.
You
So
own
I'm
a
getting
piece of a hockey team. That's pretty cool.
yeah, and they also own their mascot, which I can't think of his name right now. Or
Oh
its name.
yeah.
Whatever the goofy guy is. Everybody
Yeah.
has a goofy mascot. So yeah,
I
man,
want
it's
is it like
just
Gruffy or Griff or something like that? I'm
I
not
just
sure.
did a video on it. I'm terrible with that. I should remember, but yeah, I mean, like Comcast, they just own. They're a gigantic conglomerate,
Yeah.
and they own a bunch of stuff. Like they also own a lacrosse team. Then they own, oh god, what is it? The Not the Marlies. I can't think of it. They own a minor league team, but yeah, they
Right.
own they own a bunch of stuff, and you get exposure to all of that. And it's funny, speaking of Canadian presence here in the United States, which so I don't know how to tie that in. I've heard once that Canada is like the United States' hat, which I don't know if that's funny or derogatory or not. So to anybody listening, apologies. I like hats. I wear hats, so I think it's a good thing, you know.
Yeah.
But my bank, forever, my very first account was at Harris Bank here in the Chicagoland area. And then in came BMO, and it was BMO Harris Bank for the longest time. And I just got a notice last month that said they're lopping off the Harris Bank, and it's just going to be BMO, so Bank of Montreal. They are,
Yeah.
and I don't know why I don't own them outright. I believe I have exposure to them in some of the mutual funds or ETFs that I invest in, but
Yeah.
yeah, I don't outright own in like a taxable account. I don't own BMO, but I think they're strong. A lot of those Canadian banks have been paying dividends for well over 100 years.
150.
Yeah,
Act
crazy.
actually, speaking of Bank of Montreal, they're the oldest, dividend payer of the Big 5. This is a great segue into, the banking sector. Um, so in 7 years' time, in 2029, Bank of Montreal will be at 200 years of paying dividends.
That is just outstanding. Too bad they weren't growing all that time. Which we're going to need another name for the dividend. Companies that pay for 100 years. I'm thinking centurions or emperors because we have dividend
Yeah.
aristocrats, 25 years of growth. Kings are 50 years of growth, but I don't believe there are any companies that have been increasing their dividend for 100 years, but I
Yeah,
think we'll live to
probably
see
not.
that.
But
Yeah.
so just I'm going to unpack the Canadian banks a little more. So
Yeah. Go ahead.
basically, what we have are called the Big Five, being we've mentioned most of them already: Bank of Montreal, Bank of Nova Scotia, CIBC, which is Canadian Imperial Bank of Commerce, RBC, which is Royal Bank, and then TD, Toronto Dominion. And then there are a couple smaller regional banks, and this is what I've discussed with other American guests on the podcast. How in the US you have sort of your big 3 or 4 banks as well, your JP
Hmm.
Morgan Chase and your, Bank of America, Wells Fargo. But then beyond that, you have the regional banks where basically they were saying like some of the other American guests were saying, like, pretty well every state has its, the first Bank of Wisconsin or the first Bank of Nebraska or the first Bank of Texas or
Yeah.
et
Yeah.
cetera. So there's just a lot more regional banks in the US and a lot more, I guess, banking options. Whereas in Canada, you basically have these big 5, and then, like I said, 3, maybe 4, regional ones, and then credit unions as well, but credit unions are
Hmm.
a little bit of a different animal. But yeah, going back to the big 5, yeah, so Bank of Montreal paying a dividend since 1829, Bank of Nova Scotia, I believe since 1833, and then the youngest, if you wanna use the word youngest, is Royal Bank of Canada at since 1870. So it's at 152 years as well, which is just mind-blowing that they've all been over 150 years of paying dividends, and now a couple of them, like BMO and Bank of Nova Scotia, coming up on a 200-year anniversary. And yeah, I agree with you. I think not even just for growth, but just paying a dividend for over 100 years, we should have a name. And yeah, Centurion is, I think, the perfect name for it, right?
I think so. I think it makes sense. And dude, it just goes to show what strong businesses banking is. And I
Yeah,
think it's going to continue to be. And I know there was the whole hullabaloo about, crypto being the great disruptor and DeFi was going to unseat all of these, banks and credit card companies. And I don't know, it may happen, but, it
because
doesn't
we
look
don't
like
know
it's
the
going to be
future.
anytime soon. Doesn't look like it's going to be soon. What do you think
No,
about all that?
yeah. So I definitely think crypto has its place in the future. I don't know exactly what that place is, and I do see crypto being a disruptor. But as of right now, I don't see it happening anytime soon to unseed the banks of their, you know, perch atop the loft, if so to speak. And I guess the other thing that sort of almost scares me in the cryptocurrency world is if governments introduce CBDCs, central
Hmm.
bank digital currency. That is frightening because obviously the majority of the successful cryptos are decentralized, whereas a CBDC, oh, that's just a just a problem waiting to happen in my opinion. Like, government tracking to the core.
Yeah, and I think it's all gonna be on I think once they do that, then I think that that might be two ways we know that crypto has really arrived is when I think they do need regulation. I mean, I was one of the people that got burned with Celsius. I had not a lot. I think maybe like $3,500 worth of crypto in Celsius. It
Yeah,
sucks, but I at least kept telling people that was my forethought was I like the idea of crypto and I want exposure to it. But if I woke up tomorrow and it was all gone, it all went away overnight, I wouldn't be surprised. So I was really trying to limit my exposure. And unfortunately, I had money in Celsius, which is probably going to be gone,
yeah,
but it just sucks. I mean, it's less than 1% of our net worth, so it sucks,
yeah,
but it's not going to destroy us. It's not going to wipe us out. And I think that government regulation is going to help start to put it more on the map because largely people, don't know, they don't care, they don't use it. And then secondly, like we've just saw when Bitcoin just collapsed, nothing
yeah,
happened. The economy was fine, nothing happened. But I think if we see like a crypto crash or a crypto winter, and then like the real world economy, if that starts to struggle or the ripple effect is into the economy of our lives, like actual tangible products we buy, use, sell, move, and all that, I think
Hmm.
that's when we'll know crypto's arrived. But as of now, I think if Bitcoin just went away tomorrow morning, the world would just, it would be a news headline, but most people would not be affected by it. So I
Right.
think crypto still has a long ways to go.
Oh yeah, I would agree 100%. Um, Kind of tying it back to, to
Mhm.
dividends. I just with the dividend investing, I sleep way better at night. I do have some positions in several different cryptos, probably 4 or 5 different cryptos, maybe even more. And but again, yeah, it's a relatively small percentage of my overall portfolio
It's your mad
because
money.
I really focused on that dividend growth, compounding, you know, getting my dividends to buy me more passive income and just growing that from now until I retire, whether that's, 10 years, 15 years, 20 years, whatever. And by that time, that's, the sort of the end goal is to live comfortably when you're in your, 60s, late 60s, 70s and to the end, right?
We're all living longer now, so who knows how long the average lifespan will be
Right.
when we're up there in age. But yeah, it just speaks to it, man. I mean, just having companies pay you that cash flow that's hopefully growing, investing, as I always say, I'm just always, one of my words to the wise is, and I've learned this, is not to look at the yield. Just don't look at the yield. There's studies out there that even show that beginning with a smaller yield, but they consistently grow that dividend
Right.
faster over the course of, it might be 10 years or 15 years, it really will outpace the companies that just have that high starting yield.
The
But
scary
you know,
yields,
yeah,
the
you
ones
you
that they
just
look so juicy, so attractive, but you're saying to yourself, the bubble has to pop at some point.
Yeah, and I've learned the higher the yield, the higher the risk. That's what been one of my experiences. And it's just buying those businesses. And that's why I tell beginners, I'm like, never just buy a dividend yield. That's one of the worst things you can do, is to just buy that yield. You're setting yourself up for disappointment and potential financial loss. Obviously, we don't know. And it really doesn't have to be complicated. I see some people try to overcomplicate things, and it's just like I said, back to PepsiCo. I sleep well at night with
Yeah,
PepsiCo and Johnson and Johnson and Procter and Gamble. Like those are, some sleep well at night stocks, in my
for
opinion.
sure.
It's just a wonderful thing that anybody really can participate in. And again, going back to that, but man, if you just don't make money while you're sleeping, you're literally going to work until you die, or until
Right.
you schlub off with somebody else that'll take care of you. Get yourself a sugar daddy or sugar mama based on your
Yeah.
preference. Nobody's judging here.
So talking about
Yeah,
dividend yields, I'm going to throw out a number that's going to absolutely scare you,
let me
and it
hear it.
should. So I own an ETF, and the dividend yield when I last looked at it was 17%.
It's not
So
Jeppy. It's not. Are you going to
so
share it? Or are you going to keep? You open a loop, man. You got to close the loop. Don't keep me waiting. What
okay, so
is
the
it?
name of the ETF is called DFN. It's on the Toronto Stock Exchange.
Okay.
But so once you look into it a little deeper and you unpack it a little more, they basically invest in 15 Canadian companies, and in those 15 companies, they have four, if not all five, of the Canadian banks. They have Telus and Bell, so two of the three biggest telecoms, and they also have Sun Life and Manulife, which are insurance companies as well. So everything that they have in that ETF are very strong companies. So, and I do own it, and I do own a small position in it. Like, I want to say 30, maybe 40 shares, like not very much.
Hmm.
But yeah, just basically a scary high yield at 16, 17%, whatever it is. It's over 15 right now. And you look at that and you go, oh, that's what, how can that be sustainable? When's the bubble going to burst on that one? But yeah, no, like I said, you look at the 15 companies in the ETF and you're like, okay, well, I want exposure basically to all of those companies anyway, and this is a great way to get them. And as long as they can kind of keep managing, and keep paying, it's a monthly dividend payer as well. So, as long as that dividend comes in each month, and like I said, my position is small, so I'm not at a huge risk
Yeah.
right
Yeah.
now. But yeah, that's a scary high yield, right?
So my question would be, because I've never heard of this ETF, is it's 17%. Are there any companies in there paying a 17% yield currently?
No,
So that would lead me to ask is how are they getting that 17%? Like, is it leveraged? And if it is leveraged, how is it leveraged? Is that
right,
leverage risky? What's that leverage look like? So that's something I've found out, because yeah, it's weird. And it just seems so simple. Is like, okay, none of the companies in there are paying, like, we'll just say if none of them are paying over 6% yield, but yet this pays a 17%, monthly APY monthly yield. Well, how are they getting to that 17%? What's making up the difference to pay that?
right.
That's what I would be curious to know.
That's a great question that I do not have the answer to. So,
Yeah, yeah. Well, then let us know. Look into it. I
okay.
need to know now. What was it? DFN
Yeah, DFN probably
on the
.to if you,
on the
because quite
Toronto
often you have to
Exchange.
add the .to to get a Toronto stock when you're on your whatever you use to look up quotes.
I need to close that loop, so I need to know. That's one of the things when I get these loops that open up. Like, I'll be laying awake at night, being like, "How are they getting that 17%?" Like, I gotta know. I want to know.
Yeah, that's awesome. I see. We're coming up on an hour real fast. We haven't really even touched
Time
on all the sectors,
flies.
but that's fine. We've had a great discussion about you know retirement, different types of vehicles to get there in the two different countries, and a lot of different. We have touched on a lot of the sectors. We've kind of jumped around a little bit. That's okay. Um, as we're wrapping up here, though, let's first you can find Rusty at Rusty Ram 78 on Twitter, and go ahead and give your YouTube channel a shout out. And like I said, I'll be sure to link it in the description below as well.
Yeah, absolutely. So I do want to say that while we may not have touched on everything, I think it's not the quantity of the information, but the quality of the
Yeah,
information. And I will say that even if somebody watching this just learned one thing that helps them on their investing journey, just one thing, then it was all worth it.
yeah,
And I have
I
a
agree.
YouTube I have a YouTube channel, Dapper Dividends. You can just go to YouTube, type in Dapper Dividends, and you'll see my face,
Nice.
my handle or whatever the heck. You'll see me smiling. I gotta change that picture, man. That's like a 7-year-old picture. Needs to do some updating. I
And
get lazy around this stuff. Yeah, yeah.
so, what type of content do you do on that channel?
Dividend investing now. So I started it as dividends, and I really started stretching the definition of dividends, meaning if it was anything that paid you passive income. So,
Yeah,
oh man, that was my big mistake as a content creator. That's one thing I've learned. I was talking, I mean, debit cards for teens, crypto, just staking crypto, dividend stocks, ETFs, doing like the Stash app, the Acorns app, the Worthy Bonds app, which was bonds, Lofty, which is like a Algorand based crypto uh, real estate invest. I mean, it was
yeah,
just too
all over the
confusing
place.
all over the place. So I must have been about 8 months ago. I said, you know what, this isn't working. Like my bread and butter, my passion is dividend investing, and you feel like I need to cover everything. So I'm like,
Yeah,
nope. If you look at my banner, it's just dividends, period.
yeah,
And that's all I'm talking about. And that's all I'm going to be talking about on that channel. So
awesome.
yeah.
Well, if you ever have guests on your channel, I'd be more than willing to come on your channel as well. And yeah, thank you so much for your time today, and thank you so much for being on the Passive Income Podcast. If you're
Love it,
still
man.
watching or listening at this point in time, you have to subscribe if you haven't subscribed already. Hey, have you noticed on YouTube the subscribe button is now black, not red?
I did not notice that.
It's been like that for a couple of weeks now. Yeah, they've changed the format a little bit. So
Is it for
yeah,
Halloween or something? Or
I know. I think it's permanent. Let me know in the comments if you click the black subscribe button or if you click the red subscribe button.
oh, somebody went rogue over at YouTube.
Yeah,
Some
maybe.
employee just snuck it in there on a dare, drinking late at night in a bar somewhere, had access to the mainframe. Watch this, everybody. That's stupid. I don't know. That's
That's
fun. I
possible.
love it.
Who knows how it happened, right?
Yeah, yeah, absolutely.
Okay, thanks again for being on the Passive Income Podcast. This has been a great episode.
Love it, man. Appreciate it.